Alright guys, welcome back to class. Like I said in the previous section, what we're going to do here is to enter a full detailed transaction here for the month of April. Now let's read through what we have. Make sure you are receiving the payment of Cash's bank accounts. Cash's bank, receiving payment to Cash's bank account, not the undeposited fund. Okay, we're going to see how to remove that. Also, what does it mean? Let me explain what it means first. It means that in QuickBooks, once you receive payments, the payments goes directly to an account called undeposited fund account. So for that place, you are going to now transfer it to the bank account that is receiving such payment. So the idea here is that QuickBooks knows that there are businesses that deals on cash and receives cash. So the only time you record those transactions into your cash into your bank is when you have already deposited them into the bank. That is when you transfer such money into the bank account. But that is just the presumed idea for me, the way I understand it, and that is the way I'm going to teach it to you. Basically, that is what it means to me. So we have April transaction. Make sure you pay bills through the expense area and receive all invoice payment in the sales area. So this is also an emphasis on QuickBooks Online. Like I said, it's an emphasis on QuickBooks Online, but it's still going to give you the same thing. Now, in our classes, in our previous classes, before we arrive at this final project that we are doing, we explained the difference between sales receipt and payment, receiving payment. That's receiving payment. We explain the difference between create sales receipt and receive payment. So this is only done when there's an immediate sales and cash is received for that payment. That is, the transaction was paid for immediately. Now, while this is received against an invoice, so let's look at it. Record the payment you have received from a customer against an invoice or bill. While this one is bill your customer and receive the payment at the same time. That's instantly. So that's just the difference. Alright, I won't dwell much on that. If you need clarification, just go back to the class where that one is taught. Okay, now let's see. Let's go ahead. So basically, this is what the thing is saying. All receipts that we are not invoice payment will require a sales receipt. I can see all receipts that we are not invoice will require a sales receipt. So you can read through this to get more clarification. So now you can see that write checks for all expenses that are not bill payments. That's immediate cash payment that are made. We use cash bills to make that. We use write check to record that. Okay. However, if there is no check number associated with the transaction, that means it is a direct debit card transaction. So change the check number to electronic fund transfer in place of the check number. Okay, so let's go ahead and see. Let's go ahead. Small inexpensive purchases under 500,000 should be expensed. What does that mean? If a payment is not up to 500,000 or is equal to 500,000 or 500, what you should do is to write it off. That is what it means. So instead of making it, even though they add what it was used to buy, what it was used to buy is an asset like item, but you still have to write it off because maybe the value, or it is the company's policy that any payment that is below this amount or equal to this amount should be written off. Okay, so that is, and it happens. What is considered an asset in another person's business may not be the same thing in another person's, will not be considered an asset in another person's business. So that is what happens here. So make sure you select the appropriate account for each transaction. Do not add any more account as you enter these transactions. Think macro instead of micro. For example, paying for a PO box or purchasing small inexpensive items such as lamp should be considered an office expenses. So you don't need to go back and say, okay, you want to create an account for this lamp. No, we don't need to do that. So you have to just write it up under office supplies. Okay, so let's go ahead. QUICKBOOKS is limited in what you can record in a single transaction. I've been saying that it's limited to what you can record in a single transaction, and that is where journal entry comes in. Okay, journal entry comes. So we're going to see a couple of instances where this is applied in this class. So let's go ahead and see. Now these are the transactions for the month of April. Okay, so we're going to start with this transaction. Now we'll journalize this transaction, right? Owner's deposit to open bank account. This was already done in previous section, which is this. We have already done that part when we are creating journal transactions. Journalize this amount. It's part of the capital used in starting up the business. Now we have payment made for rent. Payment made for rent. We are going to use the bill payment. So let's go ahead and enter this transaction. Let's go and say this one was payment we paid, or payment Cassie paid. It's a payment Cassie paid against his rent. So let's go ahead and say, okay, let's make that payment. So let's go to pay bill. When you go to pay bill, these are the list of bills that are pending to be paid. So who did Cassie pay? Cassie is paying for rent. So the rent he's paying for is for 1st April. So once you check 1st April, once you first select the transaction that you are paying for, the bill you're paying, you now come to payment date. So what is the payment date? The payment date is 1st April. The payment date is the same, 1st April. So you change it to 1st April. Now, are we using check? What is the method of payment? The method of payment is check, right? The method of payment is check, and the check number is this. The check number is this. So we are going to say assign check number. So where are we paying the money from? We are paying the money from Cassie's bank account. So let's go ahead and say pay selected bill. You enter the check number. Once you do that, you click OK. So it's telling you that this you have always been seeing this information. So let's just go ahead and say yes. So that is done. So let's say, do we have other bills to pay? Now this is a sales receipt. Now sold 111 by 14 print. 111 by 14 print. So we're going to use sales receipt. So click on done here. We're going to use sales receipt because it's an immediate payment that is made. Sales receipt. So the customer is going to be customer / sundry sales. So what is the date of that payment? The date of that transaction is also 1st April. The date of that transaction is 1st April. The mode of payment, let's say is direct fund, electronic fund transfer. ETF. It's an immediate payment, but it was transferred immediately. So maybe let's say it's cash payment, or let me just use this. This is this transfer. And what is the item? 11 by 14 print. How many was purchased? 1 was purchased. So the value is the value of that one is approximately $80. But when you add the VAT, it's not going to be 85.59. So that is all we have here. We have 85.59 because we added 5.90 as VAT, as the sales starts on that. So let's go ahead and say save and new, because we're still going to add a couple of transactions. So save and new. So what do we have again? Here we have payment. So this is a payment we made. Coffee and finger foods for grand opening. Trade Joe's using the debit card. So this is an ETF payment. So it's going to be an ETF payment. So we're going to add this trader. We're going to add this trader who is considered to be our vendor. So So we are going to this payment, we make this payment immediately, and we are going to use check to settle him. So we are going to use check to settle this transaction. So let's come back to checks. Oh, sorry. Okay, that's it. Let's come back to checks, write checks. Then come to write checks. What's the name of the vendor? Is the person we are paying. Type in the name and add it. Okay, it's a vendor. As you do that, how much are we paying him? This is what we are paying him. So we are paying the vendor, and the date is still 1st April. So once you do that, the payment is for what? The payment is for food. So you're going to use office. You're going to write it up on that office supplies, office supply expense. So it's going to be, this is going to be the description. This is going to be the description. This is going to be the description. So that is it. Once you're done with that, you can just say save and close. You can say save and close or save and new. Now this, I want to avoid this. I don't want to, that was what they were saying. We should not use undeposited fund account to record payments, to receive payments. So I want to avoid this. What I will do is go to my edits, come to my preferences, come to payments. Where's my payment? Come to payments, come to company preferences. Now I will look for use undeposited fund as a default deposit to accounts. So you can say no, uncheck that and click OK. Once you do that, it will close all the windows and so that is it. So let's see. The next time, hopefully the next time when we are doing this, we shouldn't see this transaction here. So this transaction is for when did we make this sales? 1st April. Let me deposit it immediately so that it will aid our reconciliation process. Because if you don't do it like that, it will actually disturb the reconciliation process. Okay, let's go ahead and say save and close. So hopefully when the next time we're receiving payment, we are not going to see this option. We are not going to see the transaction here. But let's go ahead and see how far. That's why I say you have to follow through and see what we are doing. Don't skip any process. Now this is sold medium ad. Sold medium ad. Sold medium ad. Original ads for this value. For this value, and it's a sales receipt. Immediate sales for this value. So it's going to be customers. So when is the date of this transaction? 2nd. So that should be 2nd April. Medium ad 1. So it is 2,500. When you add the VAT, it's not going to be 2,675. So that is what we have here. That is what we have here. So once you're done, click save and new or save and close. So let's go ahead. Don't skip any process. Let's go ahead. Now we say deposit to complete a custom ad painting for Meli Valeso. That's one quarter. That's half of the invoice value. So this is the half of the invoice value that we receive. So remember we have an invoice on that transaction. We have an invoice. So what we're going to do, we're going to receive this payment against that invoice. So click receive payment. What is Merlin? Receive payments. So once you click this, you can see the pending transaction on that. So how much did you receive? The payment we receive is half of it. So the payment we receive is half of it. And this is just a reminder. People saying, okay, if you do not check the transaction, if you apply the changes you make, yes. So that's what. So let's go ahead and see. Okay. Now look at here, there are two options here. Now we're going to leave this as an underpayment so that we can be able to track the remaining balance of that transaction. So again, let's confirm something. Let's make sure that this amount does not go to undeposited fund account. Okay, let's make sure it doesn't go. Undeposited fund account. This is discount. So let's make sure it does not go there. Alright, so see it. I don't want this payment to go to undeposited fund account, so that is why I'm going to say let it go straight to the bank. Okay, so that I wouldn't have to go back and start redepositing it again. I want it immediately. I receive the payment, let it go to that bank account immediately. So the payment was made on the 2nd of April, so the date is correct. On the 2nd of April, so I'll go ahead and say save and close. Save and close. So what is this again? I thought, okay, this was the first one. Why not? Why is it here? So this one too is second. So this one too is second. Okay, maybe there's something we did not do when we made that sales. We're going to rectify that. So we're going to be seeing how to do all those things. Alright, so let's go ahead. That is why you shouldn't skip any part of this video, so that you'll be seeing what we are doing. So we have recorded this and this. The next one is sold 24 by 36. Sold for 24 by 36. Let's go and record that. $24 by 36 for sales receipt. So it's going to be customers. 24 by 36 for. Then sold which one again? 11 by 14 2. 11 by 14 2. Then we have remember that this is what we are recording now. 595 by 7 prints. 95 by 7 prints. 9. So the total value is 12834884. So that is it. 1283.84. That is what we have. So let's see. Let's make sure that we are not depositing into undeposited fund account. So you can see deposit to undeposited fund account. Instead, we are going to say deposit to this place, to the bank account, so that we won't go ahead and be doing that again. So you can save it here. Once that is done, you can say save and close. So if you look at it here, we don't have any other thing. We don't have that here again. So we don't have to be stressing ourselves, moving and recording again. Okay, so let's go ahead and see what we have. Oh, we made a mistake. We did not change the dates. So let's go back to that transaction. The date is 4th. Save and close. Like I told you, date is very, very important, so that it will aid your reconciliation wherever there's a mistake, wherever reconciliation is necessary. So this is a payment. Using US supply. So this is a payment. So that means you're using check. It's an immediate payment. You're using check. There's no right check. It's an immediate payment. US supply. We're using check. So we have a bill, we have an open purchase order on that. So what is that? We have an open purchase order. Let's see. Let me confirm something. US app, we have this. Okay. So are going to overlook that and continue our recording. We're going to overlook that. The payment is not against that. The payment is not against that. This is a yes add supplies. That's why we are recording this add supplies. So this is check. It's a different payment altogether. It's a different payment altogether. Continue writing check. So it's a different payment. So what you're going to do, enter the value. What is the date? The date is 5th of April. 5th of April. So we're going to say the payment is for what? The payment is for add supply. Add supply. Add supply. So this is it. Add supply. Add supply. Add supply. So the date is correct, the amount is correct, so we'll go ahead and save and close. So what next do we have? We have this is also payment, pay chairs, chess aspect, right communication. We have a bill, open for that. So we're going to use pay bill. We're going to use pay bill. So this is the check. When are you making the payment? The payment was made on the 5th. On the 5th. How much was paid? Is it the full amount? Yes, the full amount. You say pay selected bill. We have check number. We have check number 2. We have check number 2. Enter the check number and say okay. Yes. Done. So let's move forward. We have cells with 4, 5 by 7 prints. 4, 5 by 7 prints. So it's going to be customers. It's going to be which dates? 12. It's going to be customers on the 12th. 5 by 7. 4. So let's see 4. 8556. 8556. 8556 method of payment is going to be, it's going to be this. Save and close. Save and close. So let's go ahead again. Payment for post office box for 1 year using debit card. So we're going to add UPS as a vendor. We're going to add UPS as a vendor. We're going to write check. We're going to write check. We're going to do UPS as a vendor. This as a vendor. So this is going to be what? It's going to be office expense 75 office expense, office supply expense, office supply expense, so let's see the description of this. Okay, description is this. So when that is done, let's go ahead and see. When that is done, we're going to say save and close. Save and close. Save and close. So we have sold consignment piece for Zara. The consignment piece for Zara is 1,500 to Bowen Castle. So we're going to add Bowen Castle as a customer. Bowen Castle as a customer. Though it's not necessary it's not necessary that we must add this Bowen Castle as a customer. We can just use it as, but since the customer is already mentioned, so let's just say we're going to add it. It's not necessary though. Let's say This is going to be a description. I'm going to use pre-sales receipt customer. We're going to say consignment for 1.5. So once you put this 1.5, you must make sure you turn on the VAT so that it will capture the VAT immediately. So once you put it, you capture the VAT here. You can see the VAT is captured. So that is it. So let's put, I'll use the description here as the memo. Use the description there as the memo. You can see where I put the description. That is that. So save, and the date is 13th. The date is 13th. So it's going to be here. Just ignore all this, is because of the name I put. So we have receive payment from Kids Love Art for invoice amount. So receive payments. So this is the amount we receive. So receive payment from who? Kids Love Art. So this is the full amount we receive. Okay, we did not receive the full amount because there was a discount. So this is the amount we receive on that. So we're going to write it off as a discount. So in this case, if we at this point now, if we like, we can create a discount account. Remember the instructions say we should not create any further account. Okay, so what you're going to do is you're going to write off, you're going to say okay, 10%, because this value, there's a 10% discount on it. So let's be sure that is what happened there. So we don't just assume things as accountants. We try to make sure that that is what it is. So let's say it's going to be 0.1 times 0.1 times 350. So minus 350. So you can see that is what is there. So the discount is 10% true. So okay, let's go ahead and say this is here payment. Now let's say write off the extra. So once we click on this C, it will now prompt another option where it's giving us whether to select the account where we want to record the discount. So remember the instructions, so we should not create any further account. So we are going to use our intuition now and say okay, we're going to write off that discount into office expense, right? So let's go ahead and see. Yes, when was this payment received, sir? When was the payment received? So the payment was received on 14th, so just let me cancel this. On 14th. So you have to be mindful of your dates. So once you click on, because we already click on write off the extra amount as discount, so it's now asking where should you record this $35 that is a discount. So what you're going to do, we're going to record this under office supply. We're going to record that under office supply, the discount under office supply expense. So okay, once you do that, we click OK, because the instructions say do not create any new account, right? So let's go ahead and see what we have. So we have paid Zara for consignment sales to borrowing customer. So how much did we collect from Zara? Zara, this is what we charge for that. This is what total amount we collected plus the VAT. So we are paying Zara 75% of 1.5. 75% of 1.5. So how much is 75% of 1.5? So we have 0.7. 770 divided by 100 times 1,500. We are paying him, so you can see that's the amount we are paying Zara. So we are going to retain, Cassie is going to retain the remaining balance as a commission. As a commission. So Zara paid Zara. So we're going to use now there's a way we can also do this. We can either use journal to offset this balance, but since the payment is made immediately, instead of wasting time using journal to track it as a payable, that as a current liability, it's better we can use another method by writing it off immediately from the income account. Remember that the income account is already a credit transaction, so when you debit it, now you are reducing the balance on that income account. So that is what we're going to be doing now. So let's look at it now. Let's see. So this is a payment, right? We are paying. So we are going to use write check. We use write check. Who are we paying? We are paying Zara. So paying Zara. How much are we paying Zara? We are paying Zara from our income account. That's consignment income. So we are going to debit the consignment income account. So when you debit the consignment income, it automatically reduce the value on that. So instead of tracking it again as an income, you are now recording it as payment. So this is it. This is the description. Just write the description here. Then the date of the payment is 14th. So the date of the payment is 14th, correct? So once we are done, we just click. Okay. Now, I don't think that we have the customer's name here. That is where we're going to just select. Okay, the name of the customer is even here. So we're going to just select Boeing Castro as a customer. That's the customer that we pay. That we are paying. So we can decide to set it like that, or we can just decide to leave it again. Okay, it doesn't matter because you have already offset the transaction. The description is already showing. Alright, once that is done, we just say save and close. So in another way we can do it, like I said, I earlier said, is coming to making a journal entry. Will come and say, okay, this account is that. Remember that the income account was the one that was the video consignment. Let's ever say consignment income account. So this is consignment income account. We now put that value. So now put 125. Then we'll now say, okay, consignment payables. Now this is just for tracking purposes. We have not made the payment. So later when we make the payment, we can come and say, okay, what is our consignment payables? Consignment payables is going to be now debited with 1125. Then our what again? Who are we paying? Okay, who are we paying? Maybe Zara. Then Zara. Where are we paying it from? From bank, Cassis Bank. We'll say Cassis Bank. So who are we paying? We say, okay, we are paying Zara. We are paying Zara. All these transactions are Zara transactions. Transaction relating to Zara. So this is the person we are paying. So once you do it like this, it will start tracking Zara. Okay, let's first of all do this one. Now this, I will delete it. I want to just show you for reference purposes. I delete it. So I save this. So if you come to, you're not actually going to see the difference right now because I record the transaction all at once. So let's go to where is our consignment payables. So if you look at our consignment payable, you can see that we have this value. So the reason why you are not seeing this, we are seeing both credit and debit, is because the first transaction was to track how much we are owing, and the next transaction is to say, okay, we have already paid for this side, the balance is actually 0. So what if this transaction was not paid for? What if it was not paid for? What if it was not paid for? paid for. Let's see what happened if it was not paid for. So let's come back to our chart of account. So if you come back to your chart of account, you can see now that we have an outstanding balance here. Now if you open this, you'll be seeing that who are we owing? We are owing Zara, and because we have not paid anything, the balance is still outstanding. So if at the end of the period, we extract our report, let's say we're extracting our balance sheets, we extract our report. Now that outstanding balance for Zara will be there. So under our account payable, we have accounts payables. This is what we have. So you will see that Zara will also appear as one of the people we are going to pay. So where is Zara? I'm not saying Zara. I'm supposed to see Zara here. We're supposed to be seeing Zara as one of our accounts payables. What is the value of the transaction? Let's see. It's part of learning, okay? It's part of learning. So let me see something. Why am I seeing it here? Okay, consignment payables. Consignment payables. So consignment payables. Okay, see it here, it's under consignment payables. So you can see that we have that as current obligation that we need to pay. And who are we paying? Zara. So because we have made these payments, there is no need for us again to record it like this. That was why I use the other side. I use the income, the right check side, that's the right expense side, to debit the income account, because the payment was made directly from that place. So debit the income account, it's still going to give you the same effect. Right now, this is just like tracking it. What we did now is tracking the transaction. So when the payment is made, like I showed you earlier on, when the payment is made, all we need to do again is come back here and say, okay, what is our consignment? Which account are we reducing the balance? We are saying consignment. We're saying there is consignment payables. How much is it? 125. Okay, and who are we paying? Zara. Then where do we pay the money from the bank? How much did we pay? The bank will be credited. So who? Zara. So once you do that and you save this again and come back to your report, yes, refresh. So if you come back to your report, you discover that that transaction, that's consignment payables is no more there because it has been paid off already. Okay, so that is just the essence. And if you check your chart of account too, you discover that the consignment balance is 0 because it has been paid for. Open it and you see that it is now in balance. Okay, but that is not, if you record this transaction and we save it, that we are entering the transaction twice. So what you're going to do, let me go back and delete that so that it will not cause problem to ourselves later. So let's go ahead and say delete the whole transaction. Alright, so we have deleted that transaction. So let's see, what do we have next? I'm just trying to explain to you why this balance and how we can record it. So we sold one large original ads for this value. One large original ad for this value. So we're going to go to our receipt. We're going to go to receipt. It's a customer. We're going to say here large original artwork for this value. Okay, instead of adding it in value, I was adding it in quantity. So for this value, so the value is plus the VAT, that is what we have here. The value is plus the VAT, that's what we have there. So when that is done, you can just say okay, save and new, or save and new. The dates 14th. So you can just go ahead and say save and close. So once we are done, we go purchase shoving from Kia. So we're going to add Kia as a vendor. So Kia is going to be added as a vendor, and we're going to use write check. We're going to use write check. So we're going to use write check. When was that? Was 15. Purchase what? From Kia. So we're going to use write check from Kia. So you're going to office supply. How much is it? So that's it. Once that is done, you can just click save and close. So also, the owner withdrew cash for personal use. This is the cash he withdrew for personal use on the 19th. Withdrew cash for personal use. So we're going to use write check. And we're going to debit owner's contribution. Write check. So we're going to say owner's contribution. We're going to debit that owner's contribution. So once the date is 19th, once that is done, save and close. So let's see, coming to the end of this class, this section. So we have paid bill for print to Red Hawks. That's bill number 4014. That's bill number 4. Paid bill. So bill payment. Red Hawk. What are we paying for? So this is what we are paying for. We're paying 868.5. Is that what you have? This is 868.5. Okay, when was the date of the payment? 19th. So this is it. Let's go ahead. The check number is 104. So once that is done, say okay. Click yes. So let's go ahead again. What do we have? We have consignment art painting completed, and pick up for Meli Baleso, receiving the remaining balance against the invoice. So we're going to say this is what you're receiving against invoice. So you can just copy this as a memo. So receive payment. Say receive payment. Meli Baleso, receive payment. So we're receiving against the balance. Receive payment against the balance. And come and say this is the memo. Say when was the date for that? 21st. Then click save and close. Click save and close. Now sold 120 by 4, 5, 11 by 14, and 10 by 4. So let's go ahead and say customers receive payment, then sales receipts 11 by 14, how many? 1. Then 5. 11 by 14, 5. 5. 24 by 36, 1. 5 by 7. 10. So we have 871, 88. So 871, 88. That's the value. 871, 88. The date is 24th. The date is 24th. Save and close. The date is 24th. Now sold one large owners contributed at display for 800. So owners contributed. So these are unusual sales for 800. For 800, unusual sales for 800. So we are going to go, and it's an asset that we are selling. Unusual sales for 800. So we are going to add for 800. So when you add the value added tax, it's going to give you 856. So that is it. So you can just say copy the whole of this and say this is memo. This is memo, and say close. Close. Go ahead. We have bank charges. Now we can go ahead and track bank charges separately, or we can write them as office expense. Remember, they say don't create any other account, but I like tracking my bank charges separately, so I will ignore that rule. Okay, go and say write check. So I'll say bank charges 18.5 bank fee. So it's going to be 30th April. So the next one is we paid our taxes. So before we pay our taxes, we are going to check the value, whether what we collected is up to this. So let's go through it. Let's save this first. So let's go back to our chart of accounts and see how much have we collected as tax. 11825,823. So we have 1118. So that means everything we have entered is checked out, is correct. So we are going to go ahead and make this payment. Let's go ahead and make this payment. So let's go to our tax area. You can see everything has the way it is done. You will not say because okay it's tax, you're going to pay it from the expense side. So we are going to pay our taxes from the taxes area. So let's go ahead and say tax management. Now let's go and say pay sales tax. So this is our sales tax from change this date from May for April to so when I was supposed to pay this, you're supposed to pay this. You're supposed to pay it in March. Let's say March. So this is what you are paying. So there is no adjustment. There's nothing like input, and there's nothing like adjusting for input and output VAT. So what we are paying is actually the output. Okay, let's go ahead and save. Okay. So we see. So you can see we have paid our sales tax that we paid for. So if you open it, can see it has equal to, so it has been paid. That is why you are seeing they are paid. Okay, it has been paid. Just that I made mistake in the dates. So the date supposed to be, the date of the payment is supposed to be this. Okay, yeah, but that's the date of the payment, so it's correct now. So we have paid our tax. That one is settled. So let's see what else do we have here. We have paid rent for May. Paid rent for May, check number 5. Paid rent for May, check number 5. Let's say pay bill. This is it. When was that paid? 30th of April for May. So the check number, enter. Yes, already keep. Yes. Now what do we have again? We have paid bill for art display on 25th. So this is the bill, art display. So this is what we're going to pay next. So let's say pay bill for art display. When was it paid? The same date. Okay. So we have the check number to be. So we have the check number to be this. So okay. Yes. And done. So that is it. We have successfully paid all our bills, record all these transactions that occurred in the month of April. So you can see the tricks we follow through all to the end of this transaction. I told you that this project is full of technical aspect of accounting. So you must understand what you're doing, and you must understand how you're supposed to record it, or which command or which tab where you're supposed to use to record each of these transactions. It's very, very important you know that, because if you use the different, like if you use a transaction that is supposed to be received and the payment that's supposed to be received against an invoice to record a payment that is for receipt, it's not going to reflect proper, even though they are still going to be showing the same accurate balance, but it will still be showing that a particular account is outstanding. Okay, so you have to be very, very mindful of all these things while you're using any accounting application at home. So now let's see. This is just a note of what we have already done, and I've already explained it, but let me see go through it. This transaction is instructing you to code an expense item into an income account, and this is particularly talking about Zara's transaction. The original transaction records the full sales price to consignment income, that is check number 3. Is receiving the consignee's portion of the consignment sales income. The amount that will be remaining in the consignment income will be the cashier scrap consignment income, which equals 25% of the sales. Now, QUICKBOOKS offers multiple ways to properly record the revenue. This method is just one way. Okay. Now, alternatively, you can create using journal. Move 7%, 35% of the consignment sales to payables account, and at the end of the time, like I told you, at the end of the time you record it and then record the check against that payment. So if you're using journal to do this, so if you're recording it, that means you want to track. If you're not making the payment immediately, you want to track how much you're actually owing that person, or at the end of the period you can go ahead and make the payment at once. Alright, so that is what we have on this particular section of the class, and in the next section we're going to be seeing how we're going to do reconciliation, because at the end of the day reconciliation is actually very, very important. It will not tell us whether all we have recorded is actually what it is. Does it reflect our bank account? If it does not reflect our bank account, where did the difference come from? So from there we can now balance everything. So see you in the next section.